If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello, everybody. Welcome back to another live stream. Good morning to you. Thanks for being here. We are just getting going here, making sure everything is streaming into our Telegram as well. Should be good to go. And nice. Okay. Hope you guys are doing well. We have got some interesting bounce back going on in markets here today. We've got S&P 500 up on the day. Nasdaq also up. Actually, overnight, we did get a jump in oil prices. But for now, we are seeing that actually get faded. And I do have to update you guys. I did get long on oil. I took a small long position here, just going with momentum here, as well as Edgefinder's recent uptick in bullishness for oil. So I am long oil. And I also saw something interesting here, which is a Nasdaq reading popping up on Edgefinder. So we will be taking a look at some charts here today, see if there are some trade setups, and see if we can find anything that looks good. As we get started, if you guys could hit that thumbs up button, subscribe if you are new to the streams. We're here Monday through Friday going through market setups. Nick, what do you think about algo trading? Algo trading can be great. I'm a big fan of semi-automatic trading. I'm not a huge fan of fully automated trading. And what I mean by that is that I think robots can do an excellent job executing what you want them to do. But if you are implementing some level of fundamental analysis, generally speaking, I like the idea of having a little bit of discretion involved and keeping an eye on your robots. But robot trading, it sounds cooler than it is. It is really just, leaving some of the entry and exit execution stuff to a robot, but it's not magical. It's not, it just systematizes things, which I'm a big fan of. So to be completely fair, like Edgefinder is kind of robotic trading to an extent for me. It's a systematic component to what I do that does a huge amount of the work. And then I simply just add my layer of discretion, risk management, etc., to the idea. So you like quant trading? I mean, sure. Yes. Again, sounds cooler than it actually is. For the retail trader out there, you're not going to be able to beat the high frequency algorithms of Wall Street. But from a simple perspective of having a robot help you out with execution of trades, just think about it. It's like it's almost having like an automation running. It's not. I say it, I'm trying not to decorate it because sometimes people hear robot trading and they're like, ooh, that sounds like it's going to be like an incredible trading ability. And I would say it's not any better at picking entries and exits. Rather, it just does what you tell it to do. Good to see you, Jarn. Hopefully I said your name correctly. Loving the Edgefinder. That's awesome. Thanks so much. First time being in the stream. Thanks for being here. We're here Monday through Friday. We basically look at setups. We look at charts in the morning session, and then I usually do a video. And then, that kind of gives you the afternoon analysis. Dollar index is a little bit soft here today, pulling back after tapping above 100. So we did get the breakout above 100. We are seeing a little bit of weakness come in, however, following that. The question is, as you pull back into this 99.35 level, which was a pretty big level of resistance, does that now start to act as support? That's the question. Dollar index to me still looks overall pretty supported. Let's take a look at our scorecard. Let's see, US dollar. There we go. So US dollar has a +6 score overall on Edgefinder. A big component is macro fundamentals. So when we break this down, dollar continues to get a strong reading with a technical uptrend on the 4-hour and daily chart. We also have manufacturing PMIs, services PMIs, retail sales, consumer confidence. These figures all beat expectations in a way that was positive for the dollar. We also had higher than expected producer price index. However, that number is going to get updated tomorrow because we have new PPI numbers coming in tomorrow. So this could sway score for the dollar. And then the 2-year yield has been on the rise, signaling a possibility of slower rate cuts this year. That is hawkish. That is, of course, more bullish for the US dollar. On the jobs market side of things, jobs data is looking bullish, right? So weekly jobless claims, ADP employment change, and JOLTS job openings, all stronger than expected. However, we still had some pretty poor numbers on the non-farm payroll and unemployment rate statistics. This was actually a huge miss on jobs data. So while I would say 3 of our 5 indicators are positive, it's still kind of mixed to an extent because of this really poor non-farm payroll. Nick, are you a coding guy? Yes. I went to school for software engineering, and now that is, of course, like when I was in college, I really got into trading and immediately combined my software engineering degree with trading, started building all sorts of different systems to scan markets, etc. And go figure, that is still what I do today. My business, A1 Trading, we build software screening tools for traders. And I have a team that helps me with building this sort of stuff now. But yes, I still am using that degree, to be honest. Give it 3 weeks, they'll lower the number. Fair. They do have that tendency to revise lower recently. In fact, we can take a look at that just out of curiosity. Let's go economic data, labor data, NFP. So the yellow line is revisions. So what we can see here is that they revised the previous number, not really much. The one before that, they didn't really revise. One before that, they didn't really revise. The one before that, though, I'm sorry, actually, I said that wrong. They did revise this one much lower, this one much lower, this one a little bit lower, this one lower, this one lower, this one higher, this one lower, lower. So you can see they consistently have been revising jobs numbers lower. And they've been doing that for years. It's a really strange concept. You would think they would be dialing it in a little bit and a little bit more accurate with these job statistics. But we did have our biggest miss in terms of jobs data in quite some time. Part of the reason, though, that the dollar is strong is that inflation is now kind of expected to start ticking up. Given the geopolitical situation with oil prices spiking, there is this expectation that that is going to turn into more inflation, right? Energy is one of the more volatile components of the consumer price index. And so gas prices jumping like they have, I don't know, we talked about this the last few weeks. I marked it down, or I took mental note of it. I paid $65 to fill up my gas tank. I have a Jeep, so it was, I think it was like 16 or 17, I think it was 17 gallons. And it was like $3.50 per gallon, something like that. So I'm tracking gas prices just for anecdotal evidence. But anyways, prices of gas have gone up pretty significantly. And overall, you know, that does impact the consumer. It impacts the state of the economy. So we'll continue to keep an eye on it. But of course, right now, I do have this short position on the Dow Jones. It's looking like I might actually get trailed out for a profit on this one. I may be cutting ties with this trade. We are seemingly finding some support here around the lows, perhaps a little bit more optimism around what's going on in the Middle East is taking place. I did go long, so I do have a position, a couple positions. So I am short the Dow Jones with a stop loss trailed into profit. So I can't lose money on this trade, but if it does pop today, then I'm out of there. I'm going to take my profits and move on to the next idea. If we do hold this area, if you roll over, then I will be looking for an opportunity to trail my stop loss further into profit. How does it impact the British economy? Same thing, right? Gas prices going up globally due to the whole geopolitical conflict. It hurts all economies if it does stay there, right? If oil prices drop back down pretty quickly in the next few weeks, then it's probably not going to be some sort of lasting economic damaging situation, right? That's why the current administration in the US and many other places want this war to be done quickly, right? Because if it happens that it stays the course for months on end, that is super inflationary and painful economically for the whole world. Now, Iran in that circumstance is kind of like, bring it on. That's our negotiating tactic. We want to threaten that so that, the US and Israel, et cetera, come to the negotiation table in a way that is more favorable for Iran. But the US, meanwhile, is touting that they're destroying everything in their path with Iran so that it looks like they can end the war quickly in a way that is more favorable to them. So that's how we're watching this thing play out. If markets are rallying, it is more likely that the stock market, et cetera, is thinking this war could come to an end quickly. And that's really, it's kind of a binary circumstance right now. If oil prices remain elevated, then that is super painful for markets and economies. And if oil prices drop, it is super favorable to the situation or to the markets. Nick, did you take the pound dollar trade? I do have a pound dollar trade on, yes. I also have a US oil long position on. And this one, let me see, am I logged into my, no, I'm not. Well, I can just pull it up over here. So I am logged in here. Let's go US oil. So I took not a ginormous position on my oil trade, but I do have a position on oil. I'm looking for this USO, which is the ETF that I'm trading here. I'm looking for this thing to continue. We did find some support here previously. Nice little push initially, but I need follow through here to stay in the trade. So if we break through these lows, if we come crashing down today, I'm just going to take the loss quickly on this one. I've done really well with oil this year, and commodities in general have been the game changer in my account this year. Stocks have been mixed, options have been good, but it's been commodities for me this year that has been a big winner. There's been some really nice trends in gold earlier this year, in oil in recent weeks. I've been able to capitalize on that. And so I am trend following here. I'm looking for this oil move to continue. If it does not, if we get some positive headlines, if things develop in a more positive way and, they start moving ships through the Strait of Hormuz and everything kind of starts to look more positive, then I'm going to get out of the way of this and just take a loss. Like real quick, no problem whatsoever. It's just going to be a small loss if it doesn't work out. If it does work, that's where I see there's potential for an asymmetric return here, which is the idea that if you get some sort of continued escalation of this thing, if Iran is unwilling to back down and the U.S. runs into more issues than they expected trying to get control of the area, you could have a significant upside move in oil. So what you might be hearing is well, Nick, are you predicting that the war is going to get worse? And the answer is not really. Like, this is kind of nuanced, but when you are trading and you get to the point in trading where you are actually profitable, what you realize is it's less about making big predictions about what is going to happen in the world and rather looking for good risk reward, risking appropriately so that when you're wrong, it doesn't matter. And when you're right, you make it count. So I think I have no idea what's going to happen in the Middle East. Like some headline could hit the wire today and cause oil prices to drop dramatically, or the opposite could happen. But where I see, you have to ask yourself the question, is there more risk to the upside on oil, or is there more risk to the downside on oil. What does that mean? Is there more risk being long or is there more risk being short? And in my opinion, there's more risk being short on oil right now. And I do think that you could get, I don't know if it's going to happen, but you could see an explosive move higher in oil prices, maybe even retesting these prior highs. I don't know that that's going to happen. I'm not making the prediction that it is, right? This is the difference. It's less about prediction. It's more about spotting risk reward. That's it, right? That is something that is very important to distinctly define in your trading. If you're somebody who thinks you're going to be able to predict what's going to happen next in the Middle East, or you think you know what's going to happen with the Federal Reserve perfectly, that's a really hard game to play. Whereas if you can look at sentiment and positioning of the market, if you can look at macroeconomic data flows, and you can just say, I'm going to follow this trend because I think the risk reward here is good, but I don't know what's going to happen with any certainty, you'll be in a better spot. Let's see, what do we get with Australia? I'm out of touch with this. The Australian dollar still looking strong here. Aussie wobbles after RBA. What did the RBA do? I'm so out of touch with the Australian dollar right now. I've been so focused on US dollar, oil, and the Dow since I'm trading those three things. A hike today in Australia. Got you. I figured that was the expectation. Close one, 5 to 4 hike. Thanks, Sluggy. Appreciate you. Gotcha. Check the Telegram for RBA. Good call, Alan. We will be doing that right away. My man Alan did a great job with this. Okay. Here's what happened. Look at this. So I got my answer here printed out for me for stream. Aussie dollars holding firm near 709, building on the 1.3% rally. Aussie's catching a bid after the RBA delivered a 25 basis point hike to 4.10. But the bigger takeaway, and let's just remember, read the room here. The RBA is hiking rates. The rest of the central bank world is looking to cut, other than Bank of Japan. Of the major G7, Australia is bucking the trend for sure. They see economic growth. They see potential inflation. The deals with China are still going through. So they have all these situations in which their economy is still moving. Inflation is still a thing. Governor Bullock repeatedly flagged inflation risk and made it clear the board isn't convinced policy is restrictive enough to bring inflation back to target. I mean, that is straight hawkish. Markets took the tone as hawkish and pushed up the probability of another hike in May, while a move to 4.35% remains priced by August. Core inflation around 3.4% is still too sticky, which keeps the tightening bias alive. The split vote also reflects added uncertainty from Iran conflict, but the signal is still the same. The RBA is leaning towards doing more, not less. Alan, thank you, sir. That's awesome. Alan does our write-ups each day, so he's on the button with that stuff. If you're not in the Telegram channel, scan the QR code below my camera here, or we'll drop the link here in the live stream chat, because there's two reasons to do it. Number one, you get these great updates. But number two, this week we're doing a giveaway of EdgeFinder. It is completely free to enter our giveaway for a chance to win a copy of the software that you see me using in all my videos. If you've wanted this, I mean, this is yours by the end of the week if you're the lucky winner. All you have to do to enter for a chance to win is join the Telegram channel, which has just been dropped in the live stream chat. Again, do this if you're not in there. I'm telling you, it is worth it. This is free value that we are putting out every single day. Alan does a remarkable job keeping us up to date with what is going on in the currency world, commodities world, stock market world, etc. So that is great value. But also, if you click let's see, where is it? We'll be posting it shortly. There it is, the giveaway. Join this giveaway for a chance to win a copy of EdgeFinder. It is a random giveaway. That will be announced on Friday. Enter for a chance to win. Get yourself a free copy of the tools that you see on my videos and live streams, and start trading with the macro. So I'm going to guess, look at Australian dollar, man. This thing has been a beast of a score the last month or so. We continue to see all cylinders here firing off for the Aussie dollar. Technicals look good. Sentiment looks good. Fundamentals also look good. Unemployment rate, 4.1%. CPI, still sticky and hot. Also core CPI. Producer price index at 3.5%. Very interesting. GDP growth at 0.8%. Services PMIs higher than expected. Retail sales higher than expected. Very interesting. Institutions are still overall long. There was a little bit of selling that came in, but from a net positioning perspective, institutions are still long the Aussie dollar. So that's one where, I want to be a buyer of that on a dip. Let's see. Probably not against the US dollar personally, but if I was to look at like Aussie yen, I marked this level as a possible area of interest. Pound Aussie, nothing. No pullbacks. Not one single pullback here. That's crazy. This one has been such a consistent bearish setups. Pound Aussie, look at this. It's just look at this historical score. Like it's just been nothing but straight bearish for like 2 months straight. And this thing has just been falling apart. This is a daily chart. Look at that thing. So clear dominant downward trend for this one. I've been waiting for a pullback on it for a while, but I certainly am not holding my breath because this thing does not seem to want to quit to the downside. I know Forex James from our side, he was short this one, caught a beautiful move to the downside. I am super jealous. I wish I was in this one because Euro Aussie and Pound Aussie I actually like better. Pound Aussie, just a straight free fall. My goodness. Nick, ExxonMobil looks good on a pullback. Yeah, if you're bullish on oil, if you think if you think there's more turmoil coming from markets, energy is probably a spot to at least consider hiding out in. I would agree with you. Although you are kind of late to the party when you're looking at energy stocks. Energy stocks have already had a monstrous run. Now I'm not in energy stocks, but I'm telling you, the play here is to try and get into stuff before it gets popular. Right now, I'd say, you're looking at energy stocks, ExxonMobil, being a big one of that. It's already had such a monstrous run. It could continue, but I typically do like to try and catch things a little bit more early on in a run where I guess you could say, well, Nick, you're kind of playing oil late in the game, which is true. But I have a pretty tight defined risk on this. So I guess if you were to look at something like an ExxonMobil, if you were to look at like an XLE, like an ETF for energy stocks, it'd have to be something where I'm looking for a quick follow through to the upside, or I got to cut the trade. Same thing with my oil idea. Okay, let me just see here. Yeah, probably going to get taken out of my Dow short position today. We are breaking out here of this resistance area, in which case I will take profits on this one and move along. I shorted the Dow Jones last week, I guess about 7 or 8 days ago. Price has rolled over since. However, it's looking like we may be bottoming out here, at least for now, on the Dow Jones. Do I want to potentially get short again, Dow? Well, let's see. Let's see what we've got. Dow Jones here has bearish readings on the technical side. Institutional activity bearish. We did see some net selling from institutions late in the latest filing. Neutral overall net positioning. Economic growth decently strong, however, so this is a headwind to my short idea. And jobs market data has improved. I guess it comes down to what PPI does. If PPI comes in better than expected, meaning lower than expected tomorrow, then the Dow Jones very well may have a larger move to the upside coming. So I wouldn't mind at all taking profits on this one and just resetting and seeing what we get tomorrow for PPI. So perfectly happy with that. Let's see. Dollar's coming under some pressure. I've had a couple short positions on the pound dollar, and it looks like I may get trailed out of this one too. Or this one will just be a loss. But I've had a good number of winners on pound dollar. So I guess my luck streak is running out here. But I caught this move, and I did catch this move as well. I tried to get short once more, and if we do break through this level here, if we continue pushing higher today, gonna bail on that idea as well. But it's been about time. You always start feeling a little bit weird when you have like a win streak going, and I've been on a really good win streak in the last, like, honestly, like the last year has been phenomenal in terms of, I've caught gold moves. Commodities this year have been really good to me. So far this year, I'm up about 13.5% in my main portfolio, which I'm feeling, very good about, given that the stock market itself is down like 2 or 3% on the year. I feel like I've had a good streak. So I know I've done this for so long. I know that just you start feeling like, hey man, I might be, I might not have losing streaks anymore. That's when you get hit with a humbling losing streak. So I'm expecting it. I'm expecting to take some L's. I just haven't had a losing streak in a while, and that's a great thing. But they're inevitable. Like, it doesn't matter how good of a trader you are. Like, you can't. I went on a rant yesterday. In fact, I'm going to share this because I think it's so important. If I can find it. And by the way, guys, if you hear something in my voice, I think I am coming down with something. Last night I slept terrible. So, not feeling 100 today, if you will. But we'll get through it. You guys you can listen to my sick rants. Maybe my mind will go crazy during this, but check this out. Okay. So I commented on this because psychologically, like, I'm a human. When I have a win streak, it's really easy for me to start being like, dang, am I kind of good at this? Right? I've traded at this point, I've been trading for 10 years. So I've gone through this merry-go-round has been spinning for me for a long time. And there's a whole side of this where when I'm on a win streak, people they're like, oh my gosh, I want to trade just like Nick. And then when I'm on a losing streak, people sacrifice me in the comment section. So I'm going to get ready for that too. Like, it's just part of it. Like, that's unfortunately I know a lot of my supporters, people who watch me, etc., they're not on that wavelength. They're like, hey, drawdowns are normal. It's part of the game. But there's a huge number of people, and it's not their fault. It's new trader 101, right? You start seeing somebody who's winning all the time. You're like, whoa, what they're doing must be working. And if somebody is losing multiple times in a row, the natural instinct is to say they're a really bad trader. But that's not actually indicative of what real trading results look like. So let me just give you my quick rant here. So where am I at? Okay. Basically, I said it would be naive to think, because I took a pound dollar short yesterday, Nick is a really good trader because he has been right about pound dollar in the last week, right? That would be a naive conclusion. I've had a couple wins in a row on the pound dollar. It would also be foolish to think because Nick has been right the last few weeks, he is certainly going to keep being right. I'm saying this because this is the type of thinking, myself included. I'm human too, right? When we're new at something, these are the sorts of thoughts that people have. But you have to rewire this thinking, because otherwise it'll get you in trouble. The proper thing to actually think, Nick has been on a win streak. He also has losing streaks. In the very long term, if he averages slightly more than he loses, that is a job well done. That's what real trading looks like. Real trading, another way to visualize this is people who are new to trading, they think good traders look like this. People who are new to trading don't realize that good trading looks like this. And then when you draw a line of best fit, you get something like this, right? But that's not very exciting. People want this chart, even though it's not realistic. But that's why most people don't make it in trading, is their expectations are, kind of out there. Yeah. Anyways, it looks like I'm out of my short position on Dow Jones just now, guys. All out, took profits on that one, and we will go from there. James, the producer, says he's not feeling great either. Yeah, I think there's something going around, man. I think like it's in my throat. I felt just achy yesterday. So maybe I'll just take a few months off YouTube. I don't know. Just kidding. You can't get rid of me, man. I'll crawl in and be on YouTube. I'll be on camera. I'm too obsessed with myself on camera. Just kidding. I just love markets. I got to talk about it. Anyways, guys, don't go anywhere because we got a powerhouse heavy hitter coming up next. It is my good friend Alan Perez. You know, little brag on Alan. Alan came to see us here. We had an in-person event, and he flew down just on a whim, paid for a ticket, flew down to Atlanta where we are, came to an event, made a great impression on everybody on our team, and now he's part of our team. Right? He does live streams with us. He does content for us. Stand-up guy. I stand by that. So if you are interested in hearing from Alan, he's going to be going through some setups as well. He's got the show just after this break. But real quick, let me just remind you guys, hey, join our Telegram channel. We're doing a giveaway this week. It's free to join. Just join the Telegram. QR code right below me. Just fill out this form and you will be entered into the giveaway for a chance to win a copy of Edgefinder at the end of this week. So good luck to you. Hopefully you win. And up next, we've got Alan Perez. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey everyone, good morning. Thanks for that handoff, Nick. I think I got the sniffles too. I think there's something going around. I think someone in the chat said that there is an outbreak of meningitis, but don't go anywhere, guys. I have 3 trades running at the moment. I'll go ahead and explain those trades for you, how I plan to manage them, and what I'm looking at next, because you are in a weird situation, not weird situation, but in a point where you have to make a decision. Do I exit the trades? Do I continue with the trades? What happens either way? I'll definitely go ahead and cover those here with you guys. So definitely go ahead and stick around for my portion of the segment. And then we do have my good friend here, Marco, coming on to join me as well. So let's go ahead and get started with what's moving the markets. Really, there has been no headlines, and at the moment, it seems like no headlines is good news, or no significant headlines. So you are seeing the oil here a little bit soft on the day. Dollar index here is continuing that decline, but very interesting. You are getting to this level of what I think could be support if this thing continues to the upside. So I'll go ahead and go into that as well. You do have things like, equities are trading higher on the day as well. The S&P, the Nasdaq, the Dow Jones, all that good stuff. And the VIX is getting a little bit soft here today as well. So it's going to be looking like a risk on day for now. If you just look at the currency strength chart here, relative strength index, in real time, you can see that the Aussie dollar is on top, and the weakest link seems to be the Canadian dollar, which makes sense because oil is down today. So for those that don't know, there is a correlation to the Canadian dollar and oil. So if oil does well, Canadian dollar does well, and vice versa. So I have 3 trades running at the moment. They are all in the green here today. Thankfully, I did exit the positions for a slightly above break-even position just because I didn't want to have that weekend overnight risk, because it seems like over the weekend, that's when headlines really seem to hit, those big ones that can cause, gaps ups or gaps downs. So essentially, I just, exited the position on Friday and re-entered immediately on that Sunday open, as if nothing ever happened. And we are up on the positions here. So I have Aussie dollar long, Aussie CAD long, and Aussie Swiss long. So they're all doing pretty good well. And how I plan to manage them is, for the Aussie dollar in particular, you do have this level of what could be resistance here, the 0.7200 level. So if we do get a break above this level, then I would just go ahead and wait for like a retest opportunity. And then I would just trail the stop and let this thing run as fast as I can. Usually I have a fixed target here on currencies just because over the long stretch, currencies are mean reverting. But at this point in time, you have the Aussie dollar really, really showing that outperformance, and it's holding up relatively well considering this whole risk off environment. So Aussie dollar, same thing with the Kiwi dollar, is a risk on currency. So despite that, it's doing pretty well. So that's why I want to let this run for as long as I can. Um, Aussie CAD, Aussie Swiss, same thing as well. You do have this level of resistance here at this 97500 level for Aussie CAD. Looking for the same situation, a break above that, a retest, and a continuation play. But if we do start seeing a stall out across the board, then this is where I will seek to take profits. And then Aussie Swiss as well. It seems like you are going to get that first. The Swiss basket in general has been weakening for some time. So that's what I'm looking for as far as the Aussie Swiss. Now, what happens, right? You are seeing that dollar index here, and I do have an alert here at that 50% retracement. I'm going to delete this for now just because I don't want it to go off on stream, and it is pretty loud here, so I do have my AirPods, so my ears might bleed. But we are seeing that dollar index here getting a pullback into that 50% retracement level. Now, looking past here, you can see that dollar index has pulled back before once and then just went way higher there. So there is definitely a possibility that you do get that pullback and continuation on the dollar index if you see some safe haven appetite in the market. But for now, oil is lower on the day. You have yield for the US continuing that decline, but they're still elevated, right? You still have this elevated yields. That's not good for interest rates for the US, right? That means that the Fed is likely to be neutral to hawkish in their next meeting here, which we do have a meeting tomorrow for that. So let's see. So someone said, why are you so confident on USD strength? Been short on the dollar since last week, and I'm really considering cutting it now. I love your name, by the way. Yeah, so there's a possibility. So let's go ahead and talk about that, right? Dollar index here, in my personal opinion, and this is just how I'm approaching the market now, and how I would advise. You approach it is play the obvious trade until it no longer makes sense. So in this case, right, it is dollar to the upside, it is oil to the upside, it is risk off, right, or things like that. That is the way I would go ahead and approach it, is just go ahead and ride that until it is completely over. In this case, that does mean dollar index could catch a bid here. The only dilemma is this is definitely a point where if you start to see yield flop, you start to see positive things happening, then this is the moment where it ends. Right now, I can't predict that this is going to happen in this current moment here, but the way I would approach it is with my current positioning, and my current positioning is actually, if I were to attach a name for it, is kind of neutral to optimistic. Neutral in the sense that the Aussie dollar, I'm kind of betting on a de-escalation, but the Aussie dollar is actually holding up its weight, so I like that fact. But then you also have the possibility that if there is a de-escalation, you will probably have US dollar weakening, oil weakening, so that means CAD weakening, and then Swiss weakening as well as the basket depreciates, and then Aussie dollar as a risk on currency appreciating. So I'm pretty much in the camp where I'm like, neutral, just gonna let this play out. If we see, nothing change, like things just stay the way they are now, then most likely Aussie dollar just drifts higher a little bit. And then if you do see a sign of de-escalation, then the Aussie dollar, being a risk on currency, will most likely catch a bit higher. So that's the way I'm positioning. And again, I'm going to play that trade until it no longer makes sense, until something disrupts it or something fuels it. So that's pretty much my approach to how I'm trading it. Now, if you are in no trades at all, you're flat, you're looking to re-enter, then I would watch price action for today and see how that develops. To give you guys some actionable clues, some actionable steps here, the way I would gauge dollar direction is 1 oil and 2 yields. Those are the 2 charts that are going to give you clues for direction bias. Fundamental outlook for the dollar is looking pretty okay, right? You did have NFP and unemployment come out not too good, but you did have ADP and JOLT unemployment, or no, it was JOLT and jobless claim, something like that. The most recent job numbers did come out good. You have growth still good, and you have inflation here. Let's look at inflation for the U.S. I can't remember it off the top of my head. Let's just go to the heat map here for the U.S. economic heat map. Let's look at the U.S. here. You are getting a 64 read here at the bottom right. Basically, what that means is most of the economic releases are coming out in favor of the U.S. dollar. But just looking at growth here, you have GDP slight miss, or you had GDP miss here on the 13th. We have PMIs, services PMIs, retail sales, all looking good. CPI came in flat. PPI came in a little bit hotter, which is bullish for the dollar. So inflation ticking up a little bit there. That was the most recent one. So we'll go ahead and see how that comes out on that new read. PCE still elevated here, 3.1%. And then you did have, that unemployment rate, not too good, but then you had initial jobless claims and jolts, and ADP all come out pretty good for the dollar. So you have an overall pretty looking good dollar, heat map there looking for it. And by the way, guys, go ahead and monitor this on your own. If you have the Edge Finder, fantastic. If you don't, definitely recommend join the Telegram channel because there is a giveaway for that. So what it would look like is if you enter the Telegram channel, it's completely free, by the way. You just scroll up a little bit and you will go ahead and see this big giveaway screen, and it tells you exactly how to go ahead and enter. So we'll drop the link here for the Telegram channel in the chat. But, get yourself a copy. This is a chance for you to go ahead and get that and definitely take advantage of that free giveaway. I promise you it will help your trading for the better, and you will not regret it, not one bit. And it's completely free, so why not? So essentially, I would, again, I would watch yields. I would watch the oil price for direction bias on the dollar. There is a chance, though, that I do enter dollar long. And what that would look like is euro dollar short, right? So there is a possibility that I probably, add some hedging and exposure there. So what that would look like for me, and this is a trade that I might take. If you start to see the price action develop today, then I will most likely take the trade today. What that would look like is euro dollar here. If you just put a Fibonacci retracement level, you are at already the 38.2 and that 50% retracement level. So anything within the 61.8 and 50% retracement level, I think is a good attempt at shorting the euro dollar, trying to catch that dollar bid there. But again, I would only do that if you see yield higher, 2-year yield higher, and oil higher. As of now, though, we are getting a soft oil price. So let's go ahead and verify in real time. This is what I do to see if there is anything new that could advance or decline the oil price. So nothing in red here. Okay, no, that's stock related. Yeah, nothing that I can see here at the moment. And this is pretty up to date because I was watching this morning. So everything up into that German confidence reading seems to be nothing pretty big for that oil story. So we'll see. One thing interesting that I did see, though, and if you go on a Telegram channel, I made a post on the RBA today and the Eurozone because I did have confidence numbers this morning or early morning. But one of EU officials basically was like, hey, we didn't ask for this. We weren't briefed on the war. And so they're actively trying to find a way with Iran to go ahead and allow, ships to go ahead and pass through the Strait of Hormuz. Because one of the things, or one economy that is super vulnerable to this is the Eurozone. They already have struggling growth. If you add in inflation on top of that, that would be not a good situation at all. They have what could be a food and energy crisis as well if you start seeing oil prices elevated for too long. So they definitely do not want to participate in that. And if you think about it, I think it was over the weekend or maybe last week, but Trump went ahead and requested some help from NATO countries, send some ships over, running out of missiles or something along those lines. And no one stepped up, right? So this is a sign, or this could be a sign that, some of the countries are saying, look, man, like I got to help out myself. I'm sorry, but I'm going to try to find a way to allow oil to pass through. And that is just one of those domino effects where if you get one of those countries to go ahead and, get both moving through, then who knows who's next. And that could be a good sign for optimism, a good sign for risk on. Hey, Marco, what's going on?
Hello. I'm doing pretty well. How are you?
Pretty good. just writing out the current trades. I was basically saying like, whatever trades people are in, the one I'm in, or if you're risk on or risk off, play it until it no longer makes sense. So that's pretty much what I'm doing. I do have a possibility of adding some hedging risk or hedging to my current position, basically going long the dollar. But I would need a very specific scenario for that. But other than that, I mean, I'm just nothing much has changed with time besides monitoring the situation.
Yep. So before we get started with the joint segment, I just want to put the link to the DNA giveaway form. So if you guys want to participate, you can find this link in the comments, fill it out, and you'll get entered into a a DNA funded giveaway. So it's I think it's now a 10K one phase account. So just to get that out of the way, for me personally, I browsed through Financial Juice and I saw some sort of positive news. So kind of, let's say, risk on news yesterday. So if I bring it up in the breaking news and we go to Forex, let me see what I saw exactly. So just 1 second.
And while you do that, I'll answer this question here. Donovan
sure.
said, what would be a reliable alternative to Edgefinder for new guys? Donovan, I'm not just saying this just because I'm part of the stream, but the best way that I could give you advice is watch the streams on here every single day, because we do show the Edgefinder in our trading. I use Edgefinder for my execution, for my analysis. Marco does, Nick does, James does. From my understanding, everyone uses the Edgefinder as far as a guide to trading. So if you're looking for a reliable free way, just go ahead and watch the streams, watch the videos. What that will do is it'll give you an idea as to how you could use the Edgefinder one day. And then when the time is right, there's a discount or something that makes it worth your while. Then you can go ahead and get the Edgefinder and already have some kind of an indirect experience with the tool. You can also just use Financial Juice for real-time news. Or some data consolidation by hand, but that takes a lot of time. So I would recommend just watching the streams, watching the videos, and get yourself familiar. That way you're a little bit more comfortable whenever the time is right for you to get it. All right. Sorry, Marco.
Yeah, no worries. What I wanted to bring up is this. And on that topic, Nick makes a video once per day, and he pretty much goes into the top setups during the video. So if you just keep up to the videos, you're gonna see the readings, and you can catch some setups. So Iran and the US have been in direct contact in the recent days, and then you also had Trump on Iran. Israel would not use nuclear weapons. So we had some risk on talk, some talk of a possible de-escalation. But if I look at it again, the oil infrastructure has been destroyed, a lot of it. So there's no clear negotiations being done. I mean, they're talking in the background, but talking doesn't really have to lead to clear negotiations. And the hostilities are continuing, meaning Iran is sending drones all over the place. So for me personally, it's still risk off. Risk off. It's still like prolonged conflict. So we're gonna have to see what happens with that, and also to look at our possible interventions. If I bring up the Euro Swiss seems to be benefiting this week because, again, this risk on is bullish for the Euro Swiss. Swiss is a safe haven. Euro is more of a risk on currency. I'm not sure that we will even get an intervention if we do get a de-escalation of the conflict. Essentially, the only way we could get an intervention if the Euro Swiss knocks on the doors of 0.9. But what's pretty good about this position is that I'm getting positive swaps. So I don't mind holding it for even, 2-3 months. If we go to the Edgefinder, we go to the carry trade scanner. We put in Euro CHF. You will notice that the divergence is 2.15 and the carry direction is a buy. So pretty happy with this position that's running. And then USD JPY, we almost hit the 160 and then we retraced. Again, this is another position that benefits, or this is another currency pair where an intervention will most likely not happen if we get a de-escalation, because this is all fueled by the dollar strength when the war started. So I think, 2nd of March is when the market opened after the war started, and we exploded higher on some dollar safe haven bids. But what's your take on USD JPY? So if we get a de-escalation, if the conflict ends, do you think that UJ drops and continues dropping? Or do you think it drops one time as the dollar loses value, but then it starts grinding higher as it was doing even before the war?
I think the latter. I think it'll probably
Okay.
retrace that, that move all the way into March 2nd, sorry, like you said. But then it will find some support most likely. Now, how high does it go? I think it'll probably be a situation where it'll probably just stay range bound. It seems like we've been just hanging out with this 152. I think the most it will probably drop would be 152, but most likely than not, you do have, a strong, as of now at least, strong fundamentals for the dollar. It will most likely catch a bid there if it does retrace the move or even lower, and it'll just stay range bound. The intervention is tricky. Like you said, if you do get a de-escalation, then of course it retraces the move, and so that means that the yen actually appreciates a little bit, which is what they're looking for. But if it stays elevated for too long, then you have the risk of, they're basically intervening into an already strong dollar. So is it going to get washed out? Whatever the case may be, I don't know. There's a lot of uncertainties around that. The way I'm going to approach it is going to be essentially, if we get to that 160 level, I'm going to take in, like you say, an experimental position, very small, and just see if it happens. And if it happens, it happens. If it doesn't, it doesn't. And the risk will be so small that it does not affect me not one bit. The only thing would be swaps, right? Maybe not holding the position for 3 months plus, but 1 to 3 months probably won't be that bad. And so that's how I would approach dollar yen that play, because there's a lot of moving parts, a lot of variables that would probably influence that decision that I don't have the answer to that. But the opportunity is there. So that's pretty much how I would approach it.
Yeah, and I would say playing the Euro Swiss, like I can hold a buy position on Euro Swiss indefinitely because it's positive swaps. But UJ, it can get pretty expensive if you hold it for even 1 month, 2 months. If you have a big account, it can start hurting your profit expectancy, and essentially you can lose the trade without actually losing the trade, if that makes sense. You can lose the 1% in actual swaps if you hold it for too long. That's why holding a short on UJ, you need a quick reaction, and that's kind of also a reason why I didn't just put on a short, let's say at 159 or 159.5, while I'm waiting for a specific level and while I'm waiting for some clear talk out of the BOJ that they are ready, pretty much. So we had the central bank decision of the RBA. Did you follow that event? I know they raised the rate, but apparently they're more hawkish than expected.
Yeah, so they moved up the next rate hike to May. The probabilities, it's at 40%. One thing that was interesting though, that kind of caught markets off guard a little bit, was the vote split. It was a 5-4 vote, so it was not a very one-sided vote. But the path of least resistance that the markets got from that was rate hikes. So Ms. Bullock, the governor there, she did say that inflation is persistent. They need to fight that. And so why I like the Aussie dollar so much is that the Australian economy is fighting inflation, right? They have elevated CPI, 3.8 above their target. And so before this even started, before this war, they already had pre-existing motive to hike rates. Now you add in the prospect of global inflation possibly trickling into their economy. And so then you have a situation where they will definitely have to hike rates, whether it be faster or larger in hikes. And so it's kind of like this hike situation where no matter the case, that seems to be the path there. That's why I really like the Australian dollar to the long side. And then you have most other central banks besides the Bank of Japan that are looking to ease rates. So it's kind of like Aussie dollar is pretty strong here during this whole escalation. We've seen this relative strength that we've talked about before, Marco. But then you have, if all of this is relieved from us and we go back to trading the fundamentals that were driving the market before, then you have the trading environment where Aussie dollar is looking to hike rates and every other central bank is going to try to lower rates as soon as they can. And so that right divergence between those central banks is going to widen, which is obviously going to add more fuel to that trade. So yeah, that's pretty much what I got from the RBA is like, no matter the direction, the hikes are looking to the upside for now, at least.
Yeah, Yeah, absolutely. And it's great that you mentioned that they're actually now expecting even more inflation because of the energy crisis. So I'm guessing all three of your positions are doing pretty nicely. The Aussie's running in some pretty steady profit, which is awesome to see. Um, so what I have on my watch list is I have the Aussie Swiss because it has been performing so well, and we're getting this trend line through the lows. I was looking for a bit of a pullback to the 20 MA. We almost hit it, so it was pretty close. But then we bounced yesterday to the upside, and now we're almost back to these all-time highs on this sort of chart. You're trailing the stop loss, right?
I'm looking to trail.
Okay.
We are at the intersection right now for the dollar index where it is now retracing back into that level of what could be support. So this was obvious resistance before this 99.500 level. Like when the conflict was going on, you were seeing like these very strong wicks to the downside. Then ultimately you broke out of that. And now if you just, put a fib on this move, you're at that 50% retracement level. So this is like the time where if you do see dollar gain momentum to the upside on that risk off, safe haven status, this will be the time to do it. So looking to see what happens here for the dollar index. Obviously, if it catches a bid there, then these positions will get somewhat suppressed. Maybe you see some of the similar price action where we just chop around into this level here. So that's something I'm being mindful of. What I'm looking to do is watch yields and oil prices for clues on that. As of now, though, you are seeing yields, the 2-year yield at least, trading lower here today. I'm looking to see continuation of that to stay in the trade. And oil prices, too, are looking pretty flat on the day as well. So as long as you see those two things continue, then I'm looking to, stay in the trade and trail it. If you start to see dollar index stall out here or maybe catch a little bit of relief, then I'll just, take profits there and I'll actually enter euro dollar short.
Okay. And you would look for the EU short at 0.5 or maybe 6.8?
Anywhere right
Okay.
here. So I'm not going to be, I'm known for this, but being too picky and then I missed the trade entirely. I like that we're already at the 50% retracement level. So anywhere within these Fibonacci retracement levels, if you start to see that flip, even if it's at the 38.2, in fact, I would probably be more comfortable seeing a clear rejection of something like this and then adding once we get, past that 38.2% retracement level and just trade the remaining way to the downside there. But for the most part, technically speaking, we have seen, this level of support hold up pretty nicely on the dollar index. That looks like that 100.5 level. So I'm just in that camp where, I'm prepared for either way, to be honest with you. And I'm just going to, take a reactive approach to it.
Yeah. Maybe hedging some of the profit is a smart idea at the moment, because we have on the DXY we're hitting that support level that you showed. But I think Aussie Swiss, I think it can just keep on trucking higher. Maybe AU pauses a bit. So if we get some sort of a reaction on the DXY, maybe it hits AU. But as far as the Aussie Swiss goes, I think this just looks really, really healthy, really strong, really good. So definitely one of my favorite currency pairs at the moment. As far as gold goes, super flat. Is Bitcoin doing something? No, Bitcoin is starting to retrace now. But what's your take on Bitcoin? It's moving, and it's actually moving much better than gold in this risk-off environment. So what do you think about that?
Yeah, I'm happy for Michael. Good for him. We are seeing a little bit of a revival here, a slow grind higher, but I think that's still very good. It was relatively strong here, similar to the Aussie dollar, despite the whole thing. It wasn't appreciating, but it wasn't depreciating either. It was pretty much flat, and now you're seeing a little bit of a grind higher there. I'm not a crypto expert by any means. I see this two ways. This could either be a break and retest and more downside to come, or you see a little bit of a revival, and this is just by the dip. The only thing, the way I would approach it, not being a crypto expert at all, is watch global yields. If you see the story of global inflation actually happening, then that definitely adds to that narrative of the driver that was taking Bitcoin to the downside, which is that global rate hike via Bank of Japan. So if you start to see that come back again, like that global rate hike narrative, Bitcoin will probably not like that, and I would think 50 would be that good level of support that we've seen in the past. But for now, it seems to be holding up there. I think the Edge Finder is actually giving you a reading of some sort on
I think
it.
it's bullish.
Yeah, it's bullish. So getting a 7 reading. So hey, this could be a V-shaped recovery, right? You always want to be on the right side of the V. And if you're looking, to buy it, it seems like you are getting that V formation there. So if you're getting a bullish reading, I mean, I think that's a okay trade to take, especially that what you could essentially do. Sorry, give me a sec. Is what you can do is do something like this, and just put a stop below the recent low here, and then you can I don't know Bitcoin. Do you trail stops? Do you have a static take profit? I don't know if this
trail
it. Okay, so that would probably be the approach then. You're getting a bullish reading. Seems to be making a recovery of some sort. Maybe if you see another wave of optimism or continued risk on trading, this thing continues to fly higher, because that's been the situation here for the past couple of days. Is you're getting a little bit of hints or a little bit of sign of optimism. You see the VIX down -5%. You see yields are falling a little bit. You see oil kind of stabilizing there. So maybe that's the play for now. Maybe that could be a new opportunity for some people.
Yeah, absolutely. I mean, just the relative strength. Bitcoin is performing better than gold in a risk-off environment. That's so crazy. Like immediately on the 2nd of March, when the market sort of opened after the war news, Bitcoin started to pump higher. Yes, we had a retrace then, so 2nd of March was here. Yes, we had a retrace, but now we have continued to climb higher, and we're possibly going to break out of the range. Sort of a reason why we could be seeing some buying is money may be fleeing from the Middle East. So essentially, if you have a lot of cash or if you hold a lot of gold in physical form, it's very tough to get it out of the country. Bitcoin is just one USB stick. And like most people checking, you don't really know about Bitcoin or USB sticks. So people may be putting their money into Bitcoin, putting it on a USB, and then fleeing away from the Middle East because it's full of conflict now at the moment. That was one theory that I saw on Twitter. Again, maybe it's all just completely fake, but it could be a reason why you're seeing some buying at these levels. And what I'm also seeing is there's no sellers. Like, we're just not going lower than, let's say, 60K. 60K sort of seems to be the floor at the moment. So no sellers, relative strength during a risk-off scenario, possible buying in the Middle East, people wanting to bring their money out of the Middle East. Pretty good catalysts. And as we mentioned, the Edge Finder is bullish. So let me just bring it up quickly. So let's type in Bitcoin. Quite a lot of reasons to try and take a stab at it. For me personally, I would first wait for a clear breakout out of the range. So maybe a breakout out of the 76 level with a clear blue candle on the daily. That could be a nice confirmation. I think Nick is probably looking at the same thing. I know Nick likes to trade Bitcoin here and there, especially if he's getting the Edge Finder confirmation. So could be pretty nice.
You make a good point, Marco. I just pulled up the COT data history on my screen, and there seems to be no sellers nor buyers. Like, it's kind of neutral. Like, it can kind of go either direction, which is probably why you're seeing that price action just pretty steady there. So maybe from here, like if you were to see the needle move in either direction in a good way, in a big way, then yeah, that seems like a pretty good trade in my opinion.
Yeah, I mean, if you can catch it at the start, Bitcoin can go to all-time highs pretty quickly, at least looking at the past performance.
Yeah.
Bitcoin is known to just, when it goes to all-time highs. Most of the time when there's a rally, it's a big one. So possibly catching it, I think it's worth a stab. Maybe not the full 1% risk, but 0.5, 0.25 even, just to be in as an initial position. It's always much better than being flat. So yeah. That's kind
of definitely, and you can always add to a position, obviously, if it's going out well. And if it doesn't go out well, at least you went in with an initial half size than you usually would, and that's great risk management. But that's a very interesting chart, Marco. You bring up a lot of good points there. So yeah, maybe Bitcoin is something I explore for sure.
Cool. Awesome.
But all right, man. I will let you go ahead and do your portion of the segment. Before I
Sure.
head out, guys, please go ahead and join that Telegram channel. I promise you, it is completely free value, and you do have an opportunity to get yourself a copy of the Edge Finder if you do not have one. And that alone will go ahead and just amplify your trading experience. So go ahead and join that. You guys are in good hands. You got a free DNA funded challenge here giveaway with Marco.
We do.
So go ahead and stick around for that. And we have a good conversation lined up for tomorrow. So we actually have two times that we're speaking together, Marco. So I'm excited for that one. Tomorrow's going to be a big day. So definitely go ahead and tune in for tomorrow, guys.
Yeah, 2 sessions, and we can maybe go through the full watch list that we have and maybe talk for every single thing on the watch list, because I think we're going to have quite a lot of time as the joint segment. So it's going to be fun to break down sort of the main assets in the whole markets.
Yeah, we'll do it, man. We'll do it. All
Awesome.
right. See ya.
Awesome. See you tomorrow. Goodbye.
See ya. Bye-bye.
Continuing with the regularly scheduled program, I want to post the link to the giveaway form one more time. So if you want to participate in the giveaway, fill out the form right here. So in the comment section. In 5 minutes, I will copy and paste all of the names in the wheel of names, and we will pick the winner. Let me see what sort of an account do I have for you today. It is a 10K one-phase account. So it's a 10K one-phase account. Looking at my watch list for today, Euro Swiss is a small position I have on. More of an experimental position, if I'm being honest. Gold, very flat, and I'm waiting for a bullish reading on the Edge Finder. So right now it's neutral. I need this to be bullish. Next, USD JPY, possible intervention. If we hit the 160 level, I will most likely sell UJ. How will the trade look? Well, stop loss above 163 most likely, and aiming for the bottom of this support. So essentially, this could be the profit target. 2-to-1 reward to risk, perfect. Then we have the Aussie Swiss. I wanted to participate. I wanted to get in around the 20 MA. We never hit the 20 MA. So now waiting for a possible pullback to happen again, a deeper one maybe. So yeah, just pausing on the Aussie Swiss for now, but it's on the watch list. It's one of my favorite currency pairs at the moment. And the reason why it's one of my favorite, well, first, the Edge Finder has a very bullish reading. And second, it's kind of, you can of course lose a trade if you buy, but the probabilities of losing are very low, because if the Swiss franc starts to appreciate a lot, there's most likely going to be an intervention from the SMB. So price hitting the stop loss is not that likely, because again, if you get some Swiss franc strength, it should get balanced out with the intervention. And Aussie right now is one of the fundamentally strongest currencies. The RBA is looking to hike rates even more, which is of course bullish for the Australian dollar. Aussie Swiss, pretty good play. Let me just see if someone is coming on after me. So let's see, schedule. Yeah, we have Tiger coming on after me. Okay, nice. Let's do the giveaway. So let me grab all of the names. Today is the 17th of March. Let's do it. Whoop. I scrolled too low, or I scrolled too far. 17th of March. Copy. Wheel. Paste. Spin. Let's go. So 27 entries at the moment. Who is it going to be? Who is it going to be? Shahab A. So Shahab A, congratulations on being the winner. I have your contact information. So after my segment, you can expect an email from me with the free DNA funded code. If you didn't win, but you want to get funded, consider using the code A1Live to get 25% off any DNA funded challenge. So 25% off with a reliable prop firm, which DNA funded is, you're not going to get a bigger discount. So 25% is a really, really good discount. Yes, I know you see 60, 70, maybe even 80% discounts out there for prop firms. Those prop firms are scams. This is the real deal. So I have a 25K account with DNA. This is the phase 2. So I passed the phase 1 last week, I believe. Now on to phase 2. Current equity just around break even, 25,137. That's the current equity. Free trades on SPX, gold, USD Swiss, and this challenge is purely traded by ChatGPT, which is for sort of a challenge I'm doing on my YouTube channel. It's going pretty good so far. Aim is, of course, to get a payout. So I've had a great experience so far trading with DNA. If you want to get in, if you want to expand your trading capital, A1 Live gets you 25% off. Take a look. Shahab, congrats on being the winner. So really happy for you, and you can expect an email from me after my segment. Let's see some of the comments. What do we have? Nick says, Marco, you know me too well. I'm intrigued by Bitcoin. Impressive relative strength still. BTC gold ratio showing some signs of life as well. Okay, cool. Let me see that. BTC to gold ratio. It's under, by the way, it's under macro scanners, risk on, risk off ratios. Okay. So this is the BTC to gold. It basically means Bitcoin is usually a risk on asset. Gold is a risk off asset. So this can tell you, are we risk on or risk off? But this time it's a bit different because we are risk off. We have a war. Gold sold off on the news while Bitcoin went up on the news. So the sort of the market mechanics kind of flipped. Okay, I'm in BTC longs. Sluggy says he is in BTC longs as a sort of a hedge against my risk off plays recently, but that's pretty good. That's pretty good. Good luck with that. I think it's a good play. But personally, I would wait for a bit more of a push, a bit more of a breakout higher. Iran rejects de-escalation offers. Israel says it kills Iranian security chief. Yeah, okay. Is it some sort of a breaking news? Did I miss something? I don't think so. Yeah, I didn't see that. Or is it here? Let's see. No, can't find it. Anyway, I still have 2 more minutes. Let's check the pulse on the US stock market. Doing pretty well, actually. So both Monday and Tuesday seem to be risk on. I mean, the best gauge of the conflict is, of course, the price of oil. If oil is going up, stuff is hitting the fan, and you're getting an escalation. If oil is going down, you're getting a de-escalation. One more good thermometer is, of course, the US stock market as well. So it seems to be recovering. Dow, Russell, Nikkei, and the DAX. Out of all of these, I like the Nikkei the most. So if we actually get a de-escalation, if we actually get the end of the conflict, I'm going to be back in my Nikkei position. It's the Buy Japan narrative. New prime minister is dovish. New Japanese government is dovish. Lower taxes for corporations. More money getting put into the economy. Possibly even putting the pressure on the Bank of Japan to keep the interest rates low. So essentially fully dovish, bringing capital back into Japan. So that's still the narrative. Unfortunately, the narrative got broken by the US and Iran war, essentially. So I had a trade on, got stopped out on the 4th of March, but I'm pretty happy to re-enter, especially if I get a better price. So if the conflict ends, I'm expecting this to happen, and then maybe I can get in on some sort of a pullback. I still believe in the Buy Japan narrative. Out of all of the indices, I still like the Nikkei the most. So yeah. that's about it for my segment. Tomorrow, we have a pretty long stream ahead of us. I have 2 segments tomorrow. You can see Wednesday is packed. Both segments are joint segments with Alan, which I'm looking forward to. So you can catch me tomorrow. I'll be giving away 1 challenge. So it's going to be 1 challenge per day. It's not going to be 1 challenge per segment. But again, I'll be giving away a 10K one-phase DNA account. If you want to get funded, just a reminder, A1 Live gets you 25% off any DNA funded challenge. Don't go anywhere because you have Tiger coming on after me. Good luck in the market. Stay safe, and I will see you tomorrow.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Tuesday. I'm hoping today is the last cold day we have here in Kansas. We got that snow yesterday. It's still ice cold today, but we're supposed to have 80s coming up at the end of the week. So I'm looking forward to it. Quite the night, guys, overseas while we were sleeping. Top Iranian official Ali Larijani was taken out by the forces. And by all accounts, guys, he was quite the hardliner, and some say even more important to take out than the Ayatollah. So really big events happening. It sounds like they're starting to inch their way a little bit more to open up lines of communication. I think I've seen an article or 2 on that. But yeah, quite the deal. They were also seeking out, what's his name? Gholam Reza Soleimani. As part of that, and I do believe he was a brigadier general, if I remember right. Not to be confused with Qasem Soleimani, okay, despite the surnames being the same, different families, okay, even though it's the same last name. That's, of course, the guy, I believe he was the leader of the Quds that Trump had taken out shortly before finishing out his term, the first go-around in January, the beginning of January of 2020. So quite a bit happening overnight. I was actually in the middle of my onboarding today. I look pale. I have my window right here, and the light shines off the building over there and shines right on me. So sorry if I look like a ghost. It's the lighting. But anyway, turn that one off because I don't need it. But yeah, look, I was in the middle of my onboarding today, and the guys that I'm working with for my new side project I'm doing, they're in Tel Aviv, so we're in the middle of onboarding, and their alarm went off, their bomb alarm. So he had to run to the shelter in the middle of our onboarding. So it's quite crazy, affecting people over here as well. People we're trying to work with. So it's quite the crazy, crazy period over there. But anyway, I'm not in a trade at the moment, but I am kind of keeping an eye on a couple items as of right now. Keeping an eye on dollar yen, and I'm keeping an eye on pound dollar, guys. This is the one that we've all been kind of interested, or a lot of us have been interested in over the last week or so. If you guys maybe remember, I had pointed out yesterday that it had dropped, or it had actually bounced into this 4-hour supply zone, and that we also had a 1-hour confluence over here. That's that white line talking about this puny little 1-hour candle right here. But we had bounced in there and we started to get a little bit of a pull away from it. But I really wasn't as excited about this 1-hour candle as I was the 2-hour candle, which is going to be this one right here, because we have a gap from here as well. Okay, we'll just get that out of the way. So that's really the one that I was more interested in versus the 1-hour. I just felt like it was just a little skinny. And so, yeah, I was waiting for the higher up candle. So as you can see, price is obviously retracing. We have now bounced into the 200 EMA, which is one of my rules. Now, the other rule that I'm after is the RSI down here going up to 80. It doesn't look like it's wanting to get up there. So I've got a choice to make. Do I want to say that this is close enough at a 70 and just trust the zone itself? I don't know. It really kind of depends on how this current candle closes. I mean, we had a pretty good wick on this green candle here, and now it looks like we're trying to form what might look like an inside bar, so to speak. So I don't know. I'm going to sit and watch this. This is really the main one I'm interested in as we speak. And then kind of a similar picture on the dollar yen over here. So over here, we've bounced into a 1-hour zone as well, but we're still quite a ways away from the 200. So I would really, really like it to poke through the 200. If it just starts going from here, I don't know. I really don't know. Part of the red flags I'm looking at with this 1-hour zone is the fact that it was created after bouncing off of a previous zone over here. So that's just a little. It might have petered out. Oh, I'm back. Sorry about that. That's my one-a-day internet outage. But anyway, yeah, just going back to what I was saying. So, keeping an eye on this zone, which is what we've just pierced into. But again, it's really partially created because of bouncing off another zone. I don't really like that. I like zones that create themselves, not as a result of bouncing off of another. That's just kind of the way I see it. And not to mention, we haven't even gotten down to the 200 yet. So it's a little bit sketchy. RSI, it's gotten close. It's flirted with the 20 level, but still hasn't touched it. So that's my second favorite one right there. And then as far as oil, I know you guys have been hearing us talk about oil quite a bit lately. Just a quick recap of yesterday. We bounced into this overhead supply zone. I told you guys I was interested in this zone down here that we bounced into, but the fact is we bounced into this overhead supply. So that kept me out of this trade. And as you can see, it's obviously retracing and just kind of going sideways. So I don't really have a play on oil at the moment. Still giving us a nice bullish signal over here on the edge finder, but just from a technical perspective, I just kind of look at this whole thing as just kind of one big chop fest, right? Kind of one big chop fest. So kind of like what I mentioned yesterday, I'm just waiting for it to kind of follow the path of the green arrow there. Let's close above this supply and then look for a retracement to hopefully a newly, nicely created demand zone down here. So as always, guys, if you have anything you'd like me to bump to the top of the list, please do let me know in the chat, and I'll be happy to check those out for you. I'll be closing the show out today and then hopping back on my onboarding, assuming they've come out of the bomb shelters by then. So anyway, I did notice, I did see a red event over here on Financial Juice a little bit ago that said, yeah, right here, White House received offer from the Democrats on Department of Homeland Security funding. Hopefully that is coming into fruition, guys. We got to have that set up open. We really, really need that open. So I just thought that was a cool piece of news. Does that mean the Democrats are playing nice? I don't know. I guess that remains to be seen. So that's a good sign. We'll just have to check in with that later to see if it, see what comes of it. But let's see here. I got that. Aussie CAD, Fridikon. I apologize if I butchered your name. But yeah, we'll check that out. Aussie pairs are still at the top of the list, guys. Ain't nothing changed since yesterday. Taking a quick look, Aussie remains the strongest from a fundamental perspective. Now, remember, there's technicals and sentiment to kind of factor in here, but we all know that fundamentals rules the roost around here as far as the most important analysis group. And so the Aussie dollar is still king right now. The other thing I like on this is the fact that China's up there. China is a little bit of an indirect boost for Australia since they are really big trading partners. Don't quote me, but I do think that China is Australia's biggest trade partner, if that's right. It's at least one of their top ones, but I do believe it might be their number one. So, like I've said before, when China's doing good, it's just a little bit of an indirect boost to Australia. So I like seeing China up there as well. And then pound in the Sissy, still in the cellar, still having a race to the bottom down here. But as far as the top setups, yeah, I mean, this is almost a carbon copy of yesterday, guys. Just give or take a point or two on all these scores. Aussie Swiss, Aussie Kiwi, Aussie Yen, and like you want to see, Sadiq, Aussie CAD is up there as well, and Aussie dollar. So they're all up there. So let's go have a look at those Aussie pairs and see what we can find from a supply and demand aspect. Aussie CAD. Aussie CAD, here we go. So Aussie CAD. So we did, okay. So yeah, I remember drawing this up, I do believe yesterday, guys. I really want to see some higher highs and higher lows coming out of this because we do have this supply zone that we have broken through. So there we go. That was step number one in me getting halfway interested in a pullback to a demand zone. So we've broken, we've closed. Okay. Now, really, the same thing rings true for this top zone. This is the origin of this overall strong move up here, right? So really want to see, I would really like to see it break through there as well. That's currently where we're at. So definitely don't want to be buying in this area. Definitely looking for, hopefully we can bust through the rest of it and close before retracing. But if not, well, then that just opens up some further away zones. I mean, we do have this one right here. But this is just a little bit of a cluster, you know what, right? Because we do have a nice demand candle here. We got a gap. But we just have a couple green candles before it kind of based and went sideways for a couple hours. So I don't know. I like seeing at least 3 or 4 green candles coming out of this for me to say that this right here is a decent zone. So, yeah, I would probably just ignore that. Let me go to a 4-hour real quick here. As far as underneath zones, let's see what we look like in this area. Because that by definition would be a 4-hour zone. Talking about this candle here, we got a gap. We got the volume spread analysis candles growing as it's leaving the base. So possibly that, but obviously you guys see I got another smaller time frame zone down below. So yeah, let's have a quick look at that for you. Okay, do we have some gaps in this area? Yeah, it looks like we do. I'd probably be keeping an eye on this here. Well, really a couple gap opportunities. Let me just do this real quick. Let's edit this to the dotted line. So this is obviously talking about this base, talking about this, base rally on the 4-hour chart. Obviously, we're on a 1-hour here, but I'd be looking at a couple gaps. I mean, there's obviously the closest gap to the distal line of the demand zone. And then there's obviously one just a little bit higher. So that gap looks actually stronger, but it's within the 4-hour zone. And that's all that matters. Because like when I'm looking at, a stop loss or I'm looking at a take profit, whatever the execution time frame is, that's where I want to be kind of basing that. So I would still be able to buy within the 4-hour zone. And it's just hitting the 1-hour gap, the 1-hour demand. So it incorporates the whole thing. Stop loss obviously would go below, but if we pierce through that, I do believe we have a 2-hour over here. So we do have a 2-hour down below. So if we looked at this zone, well, then we've got the benefit of knowing that we got some stop losses right in this area from the swing low, right? These buyers here that had the strength to push price up, they've got to put their stop somewhere. So they would essentially be putting it right there in that demand zone. Pound Aussie, John, yeah, with the pound Aussie as well, for sure. So yeah, there's really a couple opportunities. I'd say this zone here, this zone. I would be extra careful on this. Well, really on both these zones, but yeah, this is a hard verification, a hard confirmation. Hey, you got to give me a bullish engulfing candle. You got to give me a candle, green candle with a wick underneath. You got to have some VSA strength, showing that the institutions have, showing that institutional volume is kind of coming in down here. But yeah, I'd look at a couple of those. So obviously a little ways away, 0.9631. But, at the same point, this supply zone up here very easily could push price down even lower. So we'll see. I don't think I'm that worried about this zone, though. I mean, we do have 3 red candles coming out. But even on this closest structure, yeah, we pierced through it. We didn't close. It took a while. It took several more hours. And finally did so in the Asian session on this day. This was last Wednesday. So I'm sure we could probably just chew right through the rest of this. And if so, then that would make this one look a lot better. Probably not this one, though, because of all the chop to the left. So that's Aussie CAD for you. You did say pound Aussie. So yeah, let's go holler at pound Aussie real quick, because it is obviously my favorite opportunity, because we'd be selling the weakest currency and buying the strongest, guys. That's perfect. From a fundamental only perspective, that's perfect. So let's go find some zones over here. Okay. Get my split view up here. Okay. Everything's looking good on the daily over here. 8's below the 21, lower lows, lower highs. But keep in mind, we have bounced into this demand zone confluence underneath. So this is really the only hiccup here. Now we bounced in, but we did not touch the daily. Remember, we only touched the weekly. That's the orange box. The daily is the yellow within. We got close, but I don't think we touched it, did we? Yeah, we missed it by like a pip or so. Okay, so we didn't touch it. If we didn't touch it, it's not mitigated. If it's not mitigated, then it can't be used against us as far as, collecting unfilled orders from a daily time frame and pushing up. So I'd be looking at this 4-hour zone up here that we're looking at. It's at the top of the curve. Curve analysis says go from swing high to swing low, break it into thirds. Remember, that's in the top third. So that's in the premium zone. That's where I want to be selling. There is a zone kind of creating itself here. I don't like it, though. It's in the middle. I don't like to diddle in the middle, but if you did, maybe you would have a little bit of a benefit to this swing low here, kind of going through it, but I really don't like that. I'd like to go to the start of these big red candles. 1, 2, 3 expanded range candles coming out of this consolidation. I like that. So that's where I've got my alert set. 189.5, I believe it is. Is that right? 189. Oh, I'm sorry. 189.84. Now, if we had bounced into the daily, I would be a little, I'd be a little more hesitant about it. But because we didn't, that keeps this in play, because that's a really nice strong move out after basing and consolidating. Yeah, you're welcome. You're welcome. You took an S&P short, eh? Yeah, let's go look at that. I was just looking at the put to call ratios just a little while ago, and you're kind of getting a little bit of a mixed signal from the indices. I mean, so Nasdaq has actually moved. It's back up to neutral. S&P, the one that you're talking about, is giving us a high put volume. So that is a bullish contrarian signal, since everybody is bearish as far as their puts. And you took a short. So yeah, see, this is one of the only things that I would, just say be careful about. I mean, you're basically with the crowd, right? So if you're with the crowd, this is only one box. This isn't the end all be all by any means. But when we're with the crowd, the banks know where our stop losses are. Just something simple to think about or remember for the future. Again, put to call ratio, it's not the end all be all, but it's very important. It's literally telling the banks where your stop loss, where our liquidity is at. when we are with the crowd. So just something to think about. But yeah, I would say just be careful with it. But from a technical, from a edge finder point of view, though, yeah, I don't believe it's on here. I know we got the Nasdaq long, and then we got the Russell short, and then I think the Dow is. I know the other two are neutral, but I think they're. I'm trying to remember. These are my neutral onlys over here. So yeah, Dow. That's what I was saying. So Dow's -3. And then the S&P is a +4. Okay. So yeah, just a little bit of mixed signals overall. You got some bullish, you got some bearish, but going back to the put to call ratio, you got the S&P, get a high put volume. But then if you look at Dow is neutral. And then what did we say the S&P was? Or Nasdaq, I'm sorry. Okay, so a couple neutral, and then you got the S&P with a high put volume. So yeah, just a little. When I trade the indices, I like all this to kind of be in sync. I'd like all the indices to be either high put volume or high call volume. Not so much when they're broken up, but that's just my taste. So yeah, just be careful because you are on the side of the average trader out there. And then as far as the technical side of it goes, though, as far as that goes, yeah, I mean, you are in line with the trend. We did bounce though into this demand zone down here. I'm not saying that would wreck your plan, but it's definitely not helping because we did wick in here. Now this demand zone, in all fairness, came up and it didn't even have the power to break through this itty bitty little supply zone, skinny supply zone. It touched it, but what happened? The supply zone took it the opposite way. And that's where it bounced into the demand right there. So as far as retracing back to a supply zone, yeah, looks like I did draw one up here. What did I draw up? Oh, yeah, that's right. We drew up this one here. Yeah, it just didn't really hold it. And we're just now getting up to the 200 EMA on a 1 hour chart. So yeah, good luck to you on that. Just hopefully this demand zone bounce won't, take it away from you. Guys, keep in mind, as always, Nick does have his QR code on the screen there for Ola Prime A1. Oh, it looks like the code's actually changed. A1 Live. Is that right? A1 Live. Okay. I know it was A1T35. James, you might correct us on there if that's not right. But either way, yeah, you guys can get 35% off the challenge account of your choice if you go to olaprime.com. And I do believe they do have a competition coming up that starts on Monday. So if you guys go and create a dashboard there, it's just an account. It's not saying you're buying a challenge or anything. You can go create a free account, and then there's actually a challenge or a competition that you guys can do for free. And they usually last a week. So if you're a scalp trader, very short-term trader, great opportunity to go hop on. I know I'll be hopping in it. So anyway, that's that. Anything else, guys? Yeah, because like I said, as far as I go, I'm just mainly keeping my eyes on these couple here, dollar, yen, pound, dollar. I do have some other alerts. We might as well take a quick peek. I was actually keeping an eye on Litecoin, guys. I know we don't talk a ton of crypto over here, but I was looking because, of course, I did take that nice little winner over the weekend on Bitcoin. I was kind of looking at this Litecoin play as, I guess you could say, a little bit of a sympathy play. We had a kind of hard to see over here on the right, but yeah, we got our 8 above our 21 on the daily. Come over here to the 1 hour. We've got a nice looking demand zone. I mean, I really like this. We got high volume. We got the volume candles growing, the volume spread analysis candles. As it's leaving this zone, broke this structure and closed and just kept on going. So I want to keep an eye on this zone down here, and I've got an alert set, 56 1/4, it looks like, on Litecoin. Okay. I got a few stocks on here. Tesla, let's see. Yeah, Tesla shorts. I do believe on the stock box it was still giving us a short signal last time I checked yesterday. So I do have a couple there. Netflix as well. Got a couple zones on here. Amazon. I know this isn't a stock channel, but I just thought I would share a couple of the alerts because supply and demand carries over to really about any asset. As long as it's as long as it's got a a decent amount of liquidity. In other words, it's not a penny stock or something real, not so popular, then supply and demand works pretty well. So speaking of Bitcoin, we are bouncing into this overhead, this previous support resistance line. Let's go zoom in, this former support. So that is one area currently that we're trying to peek through chewing through the rest. 4-hour time frame, we did get a close. So because we got a close on this, I did have my eyes somewhat down here on this zone, which if you see it gave us a red VSA candle. I love zones with red red expanded range candles like that. What does it look like on 2-hour? Okay, so I can't really look at it from a 2-hour perspective because it's already clipped into the wick, the upper wick of that. So 1 hour, did we even touch? We got close, didn't we? We missed it. So this one is still on the list, boys and girls, because our wick did not touch the 1 hour. I like it. And you guys see I drew this little red box. That's stop losses from these buyers right here that had the power to push price up, break structure, break former resistance, and keep on going and close it. So you got liquidity, right? Got stop losses that are sell orders that if I'm a bank or somebody trying to put in $1 million order, I'm going to need. I'm going to need these sell orders along with the unfilled orders to fuel my buy order. Okay, so that's the current zone I'm looking at in Bitcoin. I do believe it's still giving us a +7. Okay, so yeah, it's been +7 for a handful of days now. I like that. There's your Aussie dollar on there, very bullish. We already looked at the fundamental side of that. Yeah, we went over oil. Silver is back on the list. This must have just popped on within the last hour or so because I didn't even see that on there. Let's go have a quick look at silver since it's given us a bearish signal. Remember, gold and silver thrive in chaos. We're in chaos with the war, but again, you get the slightest bit of positive news, guys, and some of these items are running with it. I mean, if they are indeed opening up that new line of communication between the U.S. and Iran, that's a good thing. That's just a slight less bit of chaos. So if we get in a slight bit less chaos, I could agree with the edge finder on this. So do we have any zones though? That's the question. We have our 8 below our 21 EMA over here. Okay, we got pushed down. We got a lower high. We got a lower low. I like it. What I dislike is the fact that we're still kind of in this congestion, this consolidation box as drawn up by the master pattern indicator, guys. Remember, that's a free indicator on Edge Finder if you guys want to check that out. But nevertheless, it's given us a bearish. So we got a supply zone up here, which would be, actually it would be, it's I guess on the upper side of that box. So I don't know about this, but we did bounce into a zone of demand here. We missed it there. We touched it again here. So yeah, this demand zone, even though it's been mitigated, I just want to be a little cautious about it. I really wish price would have closed below the rest of whatever potential unfilled orders remain in this supply zone over here, which I don't think is probably going to be a whole lot because think about it. This zone didn't even have the power to push price up very far at all before it went sideways. So yeah, I'm just going to ignore that. As far as zones, I like this zone up here, guys. Why do I like this zone? Well, because it created itself. I don't know why my stuff keeps disconnecting on me, but I love this zone, guys. You see to the left? Do we have a congestion there? No. We just got a couple red candles. All right, this ain't funny. I don't know why my trading view keeps disconnecting. What the hell's going on? But anyway, I like that this is out here on its own. I like that it wasn't created up in this area to where we were bouncing into this previous congestion. These are the kinds of zones I like. This one down here is a little too low on the curve for my taste. If we're looking at swing high, swing low, that's basically, it might be right at 50%, but I like this one. This one's a little closer to the 61.8, probably a little past it. But the point is it's in the top third. Okay, top third if I were to do my swing analysis, my curve analysis. So that's probably going to be something I'm going to keep my eye on, is this silver play. Even though it is a plus, a -5, you guys know I like -7s, -8s, things of that nature. But I'm going to keep an eye on this. We'll see if we can get a push up there. It's obviously all going to hinge on if we get any more good news coming out as far as Iran and President Trump opening up a line of communication. That's going to have a big piece on it. But guess what, guys? It's already that time. I got to get up out of here. I got to finish my onboarding. Get ready for a long day tomorrow of 4 different major currency rate statements coming out. They're all supposed to be neutral, but you just never know. Let's get ready for the lip flapping sessions. Have a good one. Peace out.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.